a great indicator for measuring volatility and using it as part of your overall tools to buy and sell a security at the right times is one of my favorites, which is the Bollinger Band. And I love Bollinger Bands because they're named after me, Steve Ballinger. Well, they're not. They're named after some guy named John Bollinger. I wish it was named after me, but so you can see it's Ballinger versus Bollinger. Okay, great. But it is very, very popular and useful as a volatility measure. So let's look at Bollinger Bands and how they're used. And they're very easy. Once we go through this lesson, you'll find that they're very easy to understand and apply. So I think you'll like Bollinger Bands as well. So kind of what are they, right? So it's a simple but powerful calculation, that's going to be put on top of your chart here. When you're using your trading platform, you just choose Bollinger Bands and it'll show this nice graphic. And we're going to look at some here in a moment here. So you get a feel for what it looks like and how to trade off it. But basically what it's doing is it's taking the 20-day simple moving average, that's moving average line, and that simple moving average of closing prices. And then that's kind of like the main kind of line. And then there's a band on either side, above and below it, that is two standard deviations away from that simple moving average. Standard deviation looking at that deviation from a mean or from that, from that simple moving average. And so the bands are going to show those relative highs and lows in the context of that moving average. So they're going to kind of travel together. There's going to be one below, or excuse me, one above, one below, and you're going to have that moving average kind of going along, and they're all going to kind of travel together. But then they expand and contract too, and that's very important. So in effect, the bands are moving standard deviations that you can measure volatility and use to trade off of as these go forward. So let's look at an example of a Bollinger Band so you can kind of see what this looks like, and it'll make a little more sense here. So here's just, this could be anything. It could be any security, because the Bollinger Bands are going to look the same, or they won't look the same. The pattern won't be the same. The patterns will all be different, but how it works is the same. So you can see we've got our price bars, our up and down black and red price bars, our volume on the bottom there, going left to right as far as back in time to more near time. And you can see in the middle there, we've got this dashed line or a dotted line, kind of this dotted line going through the middle of these two bigger bands, these two solid lines, one above and one below. Middle line there, that's our 20-day simple moving average, right? And then the two standard deviations above and below as that moving average goes forward is the high and the low of those Bollinger Bands. And that can tell us quite a bit as far as now, if we see this, there's different things that are going to tell us what to do in terms of trading. And that's what's really important too. But get a feel for what these kind of look like. And then we're going to show you actually how to trade off it. So one thing when you're looking at Bollinger Bands, you're looking for walking and squeezing. Oh, that sounds like fun, doesn't it? So a price touching or slightly breaking a band, like an upper or lower band, is a continuation signal of a trend, right? That's a good thing, right? Remember the kind of that whole classic phrase, the trend is our friend. We want to identify and know trends. So when it's touching or slightly breaking that, it's called walking up or walking down the band, those upper and those lower bands. So during an uptrend, walking up the band, the prices are hugging that top line. And as those prices start to exhaust and those higher highs are not being reached, you'll start to come off that. And the price will start to move down towards the center, down towards that simple moving average, and then possibly beyond it down towards the lower band. So when it's hugging those bands, that's showing us that's a continuation signal of a good trend. That's telling us, hey, the trend's there. We can either buy into that trend, or if we're already bought, we want to stay in that trend, depending, again, whether it's an uptrend or a downtrend. For walking down the band, it's just the exact opposite. It's on the lower band, hugging the band, and then if it comes off that band, the prices are going to start moving up towards the middle. So it's just basically the opposite. So walking up and down bands are great continuation signals of a trend. The trend is established, and then it's going to continue on. Now squeezing, as these bears are squeezing here, when bands contract, so the overall bands are getting closer together. And I'll show you this, don't worry, just in a moment I'm going to show you this. But it can show that traders are indecisive. There's not much standard deviation. In the price range, there's not much difference in prices. So things are starting to contract and traders are indecisive. And they're not willing to go to new highs, but they're also not willing to go to new lows either. Everything's starting to narrow out. There's less volatility. It's narrowing out. It's squeezing together. And that's what's going on here. The narrowing of the trading range, the Bollinger Bands get closer together. That high and that low get closer together to the middle, and that's called the squeeze. and implies an impending breakout. It's either going to go higher or lower at some point here, but something's happening. So get ready. Something may happen. Hopefully something good will happen, which would be a new trend, a new established trend. And if it can start walking up a band, that tells us something, or walking down a band, that's that continuation of the trend. The squeeze is kind of telling us that something is, going to be changing. So it's important to know, that when you're looking at Bollinger Bands, are you in a period where things are walking up or down a band? Are they squeezing, or are they in the process of, one of those two things happening? So let's take a look at an example chart here and see what we see. Do you see where it might be walking up the band, right? So the middle is, the dashes is the middle of our band, upper is the top, and bottom is the bottom of the band. So if we're walking up the band, we're looking at our top band. Do you see places on this chart where it might be walking up the band? And then also, as you're looking at that, think about, is there a part where the bands are getting closer together, where they're squeezing together? Otherwise known as the squeams. There might be one definite place, but there's another place where it's squeezing together too. So we were looking for walking of the band and squeezing of the band. All right, let's take a look and see what we see here. So I would say if you look at it, you can see how the prices are touching or exceeding on the far left. Let's start at the far left. You can see where it's walking up the band, right? Prices are either above or touching or close to that band. So that's walking up the band, and you can see it's a continuation of a trend. This is definitely an uptrend, actually a nice strong uptrend, looking at where it starts. And so that would be an indicator to me, depending on when I get in on this trend, I'd say, hey, this trend is strong, it's looking good, market sentiment, the volatility is all looking good. I'm going to hang with this trend. I'm going to buy in, I'm going to hang in until I start reaching that peak there. And you see how it starts to come off the top of that, off the Bollinger Band at the top and starts turning red, the price bars, and starts going down. That would be a pretty good indicator that even after first day or two, that I'm definitely off the trend. I want to sell now because it's definitely off that trend as it moved towards the middle. If we keep going to the right there, you can see the squeeze now. This is a pretty good example of a squeeze. It's almost like a snake, right? Where there's got a thin middle there, maybe it ate a couple things, so it's wider in two parts in this snake. It's digesting lots of stuff. But you can see where it's squeezed together. The upper and the lower band are squeezed together very close to that middle where the dots are. Where we were walking up the band, see how far away they are? Here we've squeezed together. Now squeeze is telling us what? Tells us we're in a narrower trading range, less volatility, traders are indecisive, they're trying to figure out, should we go higher, should we go lower? There's a little bit actually touching on the bottom of the squeeze there where it touches the band for a little bit, a little walk the band down there, but it really stays in this longer time frame of the squeeze. Okay, so what happens at the end of a squeeze? Do you see it? There's a gap. Do you see it at the very end where all of a sudden it jumps up to the upper end of the band and starts to go up from there? So that's a breakaway gap. If we learn about when we talk about breakaway gaps, and now we see a breakaway gap, we see the next day that's kind of confirming that. We're looking at our Bollinger Band as another confirmation of a breakaway gap. See how we're using multiple things together. And now we're on a walking up the band again, and I'm going to walk up that band, and I'm going to sell once it comes off that band, and then kind of repeat that process with the squeeze and a little bit of squeeze there, and then another walking up the band. It really never really squeezes that tight, never really even gets all that way onto the simple moving average right on top of it or crosses the line. Another way you could use this with moving averages, did it cross the simple moving average line? So this is where you can use these types of indicators together. And we saw a little bit on the far left, there's a little touching of the lower band at times. It doesn't really walk in for very long, but if it was this is a particular case where it's a real strong uptrend, so we're really showing walking up the bands, walking down the bands would look different. Let's look at another example real quick that has some, a couple more examples just to reinforce this here. So again, look for walking of the band, look for there are some definite cases where they're getting closer, touching to that, walking down the band more than we saw in the previous chart. And do you see, a squeeze? Do you see the squeeze in there? So you might see where things are going walking up and down the band here. This is happens to be for Procter & Gamble, consumer products stock. So we look at the far left, you can probably saw there, right, where it's walking up the band. We have a nice little gap. The band is, comes off the band, a little bit, but it walks it up a little bit. And then we got some volatility there, some ups and downs, some big downs there. You see those, as we move to the left to the right, or the right to the left, you'll see those red candles coming right into the squeeze. It gets very narrow, actually touches the bottom band a little bit, walks down the band a little bit, but it starts to really narrow. People are indecisive. Then it starts to get above that simple moving average. That's a buy indicator when our prices get above that simple moving average, as we learned in the moving average lesson. And then we get on that up, walking up the band, and we have that nice strong trend up, walking up the band. And then as we go to the far right, you'll see where it walks down the band a little bit, and another squeeze is forming and starts touching the band a little bit. And if you see in the middle there too, I didn't label it, but you've seen in the middle that really long red one right in the middle there with some volatility to it. That's a real outlier, right? It like in one day the price went, as far as the price range, and the price itself, started above the moving average line, moved above the Bollinger Band line that was an opening price. We know it's opening because it's a red candle, and we know it closed lower because it's a red candle. And so we know that opening price was above the upper Bollinger Band, in the price range even a little bit above that on the high on the upper shadow. But then it went way down. Something happened. It went way down, not only past the upper Bollinger Band, but past the simple moving average, way past that, and then almost getting towards the bottom band. So what a crazy day. So if you're a trader, you might be like, one, you might not be in this at all because it's not either walking up or down a band the day before. It's right in the middle. So you might be on the sidelines at this point. And then this happens and you're like, this would be a good opportunity to say, what's happening here? I need to let this develop a little bit more. And you let it develop and it's kind of staying in the middle there and it starts to move up, but it never really moves up or down until it gets to the squeeze. Well, there's a walking down the band before the squeeze on the far right. But you can see by using our Bollinger Bands, we can kind of measure that volatility. We can see where there's a big market volatile moment here and our prices kind of match up with that. But we can, take our action based on these indicators around that. So if you look at Bollinger Bands, you can see that they're very easy to kind of, observe and look at, right? I'm looking at the upper band, that lower band, that simple moving average. I can apply it to any type of security, and all that, in any type of time frame too. And it really gives me a good indicator around that. And I think it really looks good as pairing it with another indicator too, to get that confirming, either as a primer or getting another one as a confirming signal, or using the Bollinger Band as a confirming something you're seeing, and using Bollinger Band to get an understanding of volatility and that market sentiment, and using that whether you're walking up the band or walking down the band, or maybe just squeezing together. Bollinger Bands, they're a lot of fun. Wish they were named after me though.